G'day folks, you might recall my video yesterday, the live stream where I broke down all of the banks like JP Morgan screaming that there could be a 3% jump in the market on the inflation data, and sure than shit, here we are. Yes, the market did fly up, but it is giving up all those gains because this is purely hopium, and I really still think we're going to be heading into a relatively bearish market coming into the beginning of 2023, and there is a lot of devastation that is still going to be had, and I'm going to show you the data that is pointing toward that. We're going to take a look at some of the individual positions like Tesla. We're going to be looking at the Bank of Montreal, some further concerns pointing forward coming out of that bank. But let's roll it back first and foremost, folks, by taking a look at the inflation data itself. I have been spouting from the top of my little tower, my little soapbox here on YouTube, explaining to you guys why inflation is dead. Inflation's done. It's been done since July. Any idiot that looks over the month-over-month inflation data knows that. But because they take it on a trailing 12-month basis, we still have to add up all these months of high inflation where we're seeing the 7.1%. So we need to really wait till January, February, and it'll really roll off come obviously March, April, May into the spring and summertime, right? So this isn't a story anymore. And clearly that story still had the real capability to pump the markets today. I mean, take a look at the rally up. I mean, the S&P 500 in pre-market was damn near up like 3.5%, 4%, and now it is basically flat for the day. And you just look at all the charts across all these tech companies, and almost everything in the market followed that same exact suit, because again, we can't be hoping anymore. There's no more hopium left in the market. So these little signs of good news don't mean anything. But the fun thing to think about here is the data that leads into what a recession could be, because most people don't realize, we've talked about this before, that any past recession was always after the Fed pivoted on interest rates. I mean, you take a look coming into the COVID crisis here, guys, we saw the Fed pivot just before the big crash. You look at the credit crisis of 2008, 2009, the market didn't crash till after the Fed pivoted. I mean, you go back to the dot-com bubble, literally right as the market started to roll off, the Fed pivoted and then it just tanked. I mean, you go back to all of these periods, like the 1988 little crash here, guys, all of this really correlates very well to the Fed pivoting. Why is that? Primarily just because the effects of the interest rate hikes don't take effect immediately. It is a gradual buildup. And if you're talking to friends, family, go talk to anybody right now that has a variable rate mortgage, because I'm talking to tons of folks and they feel the squeeze. I mean, we're talking about payments, especially in Canada, Ontario, where your mortgage is like could easily be over $500,000. You're watching your payments go up by $1,000 to $2,000 a month on average. That is really going to hinder everything in the economy, and we're starting to see those effects just happening now. So that's one of the reasons to be somewhat bearish here, folks, and just to be very cautious, because I think the real opportunities are starting to show signs, not only in the market with stocks, but also real estate. But let's get into some of the individual stocks that I want to buy in 2023, and a lot of people have been talking about it. Why you're buying it now, I don't know, but Elon Musk booed by crowd after Dave Chappelle brings him on stage at the comedy gig. And I want to talk about this because it relates to something I talked about a week ago, but take a listen because this is just hilarious.
For the richest man in the world.
We're expecting this, were you?
It sounds like some of the people you fired are in the audience.
This is a big problem for Tesla shareholders. I talked about this over the last month and a half, that Elon, ever since he bought Twitter, it's not the fact that he owns Twitter that's the problem. It's not the fact that he's distracted by Twitter. It's the fact that the dude now has an open forum to spiel whatever he wants, whenever he wants, and unfortunately nobody is a saint. I mean, when you listen to people talk in full spectrum, you're going to hear stuff you like and stuff you don't like. Some of it's going to sound stupid. Some of it's going to sound intelligent. But the idea with CEOs is you only want them talking when it sounds most intelligent. Typically at conference calls and investor relation stuff and big product release events. So Elon Musk is going to be his own worst enemy toward Tesla stock itself. But another huge defining factor is car sales in a recession. Tesla is experiencing 40 to 50% growth rates, and I think long term the vision it's likely going to come true, whether it's robotics, self-driving, AI. Yeah, sure, the cherries on top of the cake to the auto sales they're currently working with. But the problem right now is none of that stuff exists. I don't care how bullish Meet Kevin is, he's wrong, because if we head into a true recession, guys, luxury vehicles are the first thing people stop buying, and unfortunately Teslas are a luxury premium brand. You can't buy a Tesla for like under 45, 50,000 US. And people just aren't going to be buying these in a true recession. So if we get into a recession itself, you look at the car sales in the past during the financial crisis, they fell off a cliff. Like they dropped by like 80%. Same during the 90s, that housing crisis, you go back to the 80s, that inflationary era, all the time, any recession, cars historically seem to drop by anywhere from 50 to 80%, which is just staggering, right? So that's something you're going to have to be cognizant of that is going to lead into a better buying opportunity. So if you're a Tesla shareholder, you got to be well aware of the macro events here, guys, because everyone's just acting like, oh, it's fine that it's dropping 50%. I'll just keep buying the dip. It'll recover at some point. And though I believe it will recover at some point, I'm not somebody that wants to see my portfolio drop 60, 80+% and then sit here on hopium praying that these future technologies work out for the company. I'd rather buy it on the discount at the 60% loss here where it's trading down and then cost average from there, right? So I am looking to buy back into this. It won't be this year. It'll likely be next year because as much bullishness as you can drive into this company, guys, I just don't see the macro events helping at all. And pushing it even forward, we got bad news coming out of BMO here, which has to raise $3.15 billion in a share offering after the OSFI hikes domestic stability buffer. So we all kind of understand that banks need to put, loan loss provisions aside for delinquency ratings and people that are, not paying those variable rate mortgages because they just can't afford it and they're pressuring themselves out of their own properties because of stupid mortgage brokers and banks. Back when the Treasury said in March 2020, hey, we're not going to raise interest rates for a while. It'll be a long while. And everyone got sucked into it. And now they're getting screwed trying to save a few percent on a mortgage. But nonetheless here, folks, yes, this is not good news for BMO. They're going to be raising at about $118 a share. It's already driving the stock price down a couple percent today. And this is a true sign of the times that we're likely going to be seeing a recession. If the bank regulators are coming in and saying, guys, there's something wrong. We're a little worried here. It's time to start stacking some cash, liquidate, dilute your shareholders. That's something to take into consideration when it's like one of Canada's largest banks. So I just don't see any real signs of the next 3-6 months actually looking that hopeful. So for us to kind of get out of this current market cycle, which I have to quote me, Kevin, because I thought this quote was hilarious, that this recovery is going to be like an anchor behind a ship dragging across the ocean. It's going to be really hard to reel that sucker back up. And I think it's going to take another 3 to 6 months of, continued pain, because you got to understand, like, oil commodities have been really keeping the market alive. But now that oil is rolling and continuing to kind of fall off a bit, guys, you're not going to see the same kind of crazy earnings we saw out of Exxon and these big oil companies. There's just not a lot of hopefulness across many of the sectors at this point. So it's probably going to flatline or continue to buffer for a little while until we start getting out of this painful phase, which I think will easily take another 3 to 6 months before we really start seeing the lower end bottoms, before we see somewhat of a recovery. But I'm not gambling on that, obviously, right? Like, there's no point gambling on it. You just keep your positions, slowly cost average, and make sure you got some cash, because that cash will be valuable if Tesla drops another, say, 20% or so, or your S&P drops another 10 or 20%. That's where that cash buffer is going to be very nice to have, guys. And again, if not, hey, collect a wonderful 5% interest off a short-term cashable GIC. Like, there's lots of ways you can work this market, right? There's always a way to work the market. And another funny news here too, just wanted to point this out, that Sam Bankman-Fried, finally hell is frozen over. The guy finally got arrested after going on his stupid campaign, rampaging about his stupidity and how, oh, I didn't know any better, trying to make it look better, for his own image coming up into this court case. So it's nice to see that the Bahamas actually put him under arrest, because he's been hiding there, doesn't want to come back to the States. And if we're lucky, he'll get pushed into the U.S. and, we'll get to see this little guy squirm. I honestly think it's hilarious that the ignorance behind this company, listening to the court case today, you guys should go check it out. They had no financial documents. Nothing was reported. They were using things like QuickBooks. They're complete morons running a company. Like, oh God, the pain and the reality of crypto. But it seems like the crypto market is actually enjoying this, right? I mean, look at Bitcoin rallying up 4%. Maybe they're very excited that the end of FTX has finally come to a conclusion. And we're even starting to see stable coins have issues on Binance, for Christ's sakes. But anyways, it's been a day, guys. It's been a day. I'll pass the question off to you. I'd love to know what you think about all this.